High probability breakers, part 1. So for today's video, our focus is on breaker blocks that form after an SMT. But first, what is a breaker block? A bullish breaker can be identified in the market when we see a swing low, followed by a swing high, followed by another lower low. Once price closes above the highest up close candle in this formation, which is here, it becomes our breaker block that we can utilize to use for our long entries. Now, when identifying a bearish breaker, we look for a swing high, followed by a swing low, followed by another higher high. Once price closes below the lowest down close candle in this formation, which is here, it becomes our bearish breaker block that we can utilize for our short entries. So, how can we identify high probability breakers? We need to look at two different markets to be able to find SMTs when they are presented to us. The two markets that I utilize in my trading are NASDAQ and the S&P 500. On one market, let's assume NASDAQ, we are looking for the same breaker formation described earlier in this video. But on the S&P, we want to see price fail to make that lower low and instead make a higher low. So on NASDAQ, as we can see, we have a breaker block. And on ES, as we can see, we have a mitigation block. This is your Kraken correlation, or as we know it, our SMT that is so important to us. So now let's go look at some examples. This first example, you're looking at NASDAQ's 1 minute time frame. Okay, the 1 minute time frame is where I execute, but price is fractal. So these concepts and the logic behind this high probability SMT is applicable to every time frame. But if I'm looking for entries, I am on the 1 minute chart. So as you can see here, we have an SMT where NASDAQ is making a high, a low, then a higher high. Okay, once price gets below this candle here, right, with this candle's close, we look for the lowest down close candle in that high, low, higher, high formation. And that is your high probability bearish breaker block. Now, what else makes this setup even better? Time. Adding the time element. So we're seeing the signatures in price to identify a high probability bearish breaker short setup, but also this is occurring during a macro window, and more specifically, the 2:50 p.m. macro. So this is a high probability setup utilizing time and price. And time is such a major advantage as an ICT trader. Going forward, we're looking at a 1 minute time frame of the S&P 500, and we see a bullish breaker scenario where we have a low, a high, and then a lower swing low relative to the first swing low. Now, when is this occurring? During the 11:50 macro. So again, we're seeing time align with price. Your bullish breaker is the highest up close candle in this formation. And just a quick note, when we have consecutive up close candles like this, I will utilize both bodies for my anchoring for the bullish breaker. But once we close above it, you enter on the retracement back into it, targeting your buy side liquidity pool. So we're seeing again, time and price align. Going forward to our next example, we're back on NASDAQ's 1 minute chart. And now you can start to see that these setups are virtually identical. We're looking at, again, the 11:50 macro, another macro window, and we're seeing a low, a high, a lower low. We enter on the retracement back into the bullish breaker, these 3 consecutive up close candles, and we target our buy side liquidity pool. So again, we want to focus not only on the high probability signatures in the way we read price, in this case in relation to breaker blocks, but we want to see those high probability signatures present themselves during those macro windows. And that is at its core time aligning with price. By extension, you're going to feel very, very confident about your ability to execute on a trade and hold that trade until your target. So thank you guys again for coming back to another video. Let me know any questions you guys have in the comments, and I will talk with everybody soon.